So splitting, easiest one to probably get your head around. Big player, they want to buy 10,000 lots at the best possible price. Okay, now let's say they just want to put half of that into the market straight away, just to guarantee that they actually get into the market. We kind of looked at that before. Put 5,000 lots in. We know that the price is then going to rapidly shoot up to the upside and push price higher, and they're going to get slipped, right? Now what they're going to do is those remaining 5,000 lots, they're going to put back down in those previous price levels and add liquidity to the order book there. Okay, so if I go back, you can see here, they buy 5,000 lots, price shoots up, but then they're going to add the remaining 5,000 lots of those orders back down where that price initially initiated out of. Okay, so you can see here, right, you would have had that fair range. Those 5,000 lots would have gone in, and then you would see price aggressively initiate out of that range. Now, where have they put those remaining 5,000 lots? They've put them down in that previous level. So if you can start to find these zones and areas on your price charts, you can anticipate that potentially when price revisits there, those that split large order is still going to have some remaining unfilled orders left, right? There's going to be some passive buy limits there. Okay. Now, the second reason, remember, was herding. Other traders are going to spot this, i.e. people like us, right? And they're going to identify that there's likely going to be unfilled buying pressure there. So we're also going to look to potentially get in there and surf on those coattails, right, in line with their order flow. So that's going to add even more buying pressure and more pending orders to that level. Okay, so price may eventually return to that level, filling those buy limit orders, absorbing that supply. Okay, and the other third reason, remember, was people covering those losses. So people who were selling at that previous range, if price then goes up against them, right, that now they're in the red, they're losing money. If they're still in their position and price comes back down to that level, they might just think, do you know what, I've got out break even now, I don't want to be in this trade anymore, and they're going to get out of their short position. Now, if you've sold and you want to get out of that position, what do you have to do? You have to buy back your position, right? You have to put a buy order in the market to get out of that. So what are you doing? You're adding more buying pressure in that level, right? So you've got people who split their order and they've got left unfilled buy orders in that level. You've got people who are then herding and jumping in on that action. They're adding their buy orders. And then you've got sellers who are covering their losing positions. They're now adding even more buying pressure in that level. And that's why often you will see at those previous levels of fair value, the market will agree on those new prices again. And you'll see price start to level out in that area as the market rebalances and demand absorbs that supply. Okay. Now in this instance, you could say aggressive buyers potentially cause that demand imbalance again, and then the same cycle is repeating. So in this academic paper that they looked at, they actually found that the persistence of order flow was overwhelmingly due to splitting, okay, rather than herding.